Alright, what's good everyone? Welcome back to another video. This will be another chart analysis of Bitcoin, so stay tuned on what I'm looking for this week. Alright, let's get that video going. Firstly, we analyze the weekly chart. Looking at the previous weekly candle close, it closed almost like a doji candle, very small weekly candle, which is not a very good sign because we want to see a huge, let's say if we are a bull and we want to see a bigger and fuller candle, something like, let's say these kinds of candles. These candles show a lot of volume and a lot of strength. But as you can see, last week's candle was very weak, very small, and that is not a good sign if you're a bull. And that is why I still think that we are going lower very soon. I don't know exactly when, but it is just analyzing weekly chart. It closed right at this level, the 300 regions. Alright, later I'll show you my key levels and I'll show you what's happening. And right now, this weekly candle has not formed a bottom wick yet, meaning once the weekly candle opened, it straight up went up first. And so this is actually a bearish sign because usually candles form wicks, usually, okay? So the wick has not ended yet, so this is a good sign that it could come back down to form a bottom wick before deciding what to do next. And so what comes very soon as well is the CPI data tomorrow at 8:30 AM Eastern, and that is going to move the market tremendously, depending up or down, okay? But anyway, I'll talk about it later in the video. Just some chart analysis for now, bringing back my levels. Okay, in the weekly, as mentioned already, weekly candle form was pretty small and pretty insignificant, and therefore I think the bear market rally is ending soon. So moving into the smaller time frame, which is the daily candle. Alright, okay, so zooming in, last week's candle closed at around here. The daily candle closed below this level, the 23200 regions. Okay, so I didn't expect the huge move up on Monday, yesterday. Okay, so that was very unexpected, but nonetheless, it's okay because remember, I've always been saying that the pullback is ending really soon and we might see, and we might go for longs after this huge retracement down. And we were right. It finally broke out of this bearish trend and went super bullish yesterday, hitting a high of around 24.2k levels before coming back down for a retracement. And as you can see perfectly, I've drawn the Fibonacci tool. I've left there for quite some time already. As you can see, it came down, almost touches the 22,200 regions, which I really wanted it to test, but I mean, I was just a few hundred points away, about 200 points away, but it's okay. So usually I tell you guys, price usually retraces to at least the 0.5 Fibonacci levels, and that's what it did. It touches, briefly went below it, and then came back up, and with strength, with yesterday, it pushes up to the upside, broke the bearish trend, and right now, where do I see Bitcoin going? Let's just talk about the candles first. Okay, yesterday's daily candle still did not manage to close above the 23860 key level that I already drawn over here. This is still not a good sign because we want to see at least a daily candle closure above this level, and better to see it above all these wicks before we can see higher prices. So be cautious. Right now, it can be potentially a double top. I'm just giving you guys some scenarios. This could be a double top, and with the CPI data coming out tomorrow, if it's super bad, obviously Bitcoin is going to drop again. So Bitcoin, first scenario, could do this. it goes a little bit higher, fails to close above, CPI data comes out, goes and dumps, retest, and go back down even more. And that is not what we want to see, okay? So depending what the CPI data is, hopefully we see a push up for today and tomorrow first before the CPI data comes out, whichever it is. If we want to see more bullish moves today, the daily candle has to close above this 23860 levels before we see the upside. If not, then that is very bearish news and it's not gonna look good. Okay, so first thing first, daily candle today should stay above the 23860 levels before we see upside. And the highest I think we go is this level, the negative 0.27 Fibonacci extension level, which is around 25.700 levels. And remember, as I mentioned before, I don't know which video, but if you draw a Fibonacci from this top to this bottom, between the 0.5 and 0.618 retracement levels is right at the middle, our target 25k 700 levels. This coincides very well in the higher time frame where it marks the end of the it marks the end of the bear market rally, and then we start to come back down again. Why do I not think this is the bottom? Because if it's the bottom, we should see huge weekly candles like this, but bullish candles. But we do not see that at all, and it failed to close above the 23860 levels for quite some time. It touches 1, 2, 3, and 4, still didn't close above. So that is not a good sign. Okay, so some trade ideas for this week. Moving to the 4-hour candle, we already went and broke above this trend line, so I'll just delete this. I draw a mini trend line, a smaller trend line, joining from this low to this higher low, and right now we'll see what Bitcoin does. Okay, these two levels are not key levels, but they are just regions of interest because price has been ranging at this period of time, I think last week, 31st July. So we should see Bitcoin also ranging around these levels. It could just do this, and then either go up, close above the 23860 level, and then go back a little bit above to 25k, and then we go back down. Okay, that's scenario number 1. Or we can start to go back up very soon because it just retested this region of interest, holding this as support. And so if I want to take a trade, for confirms, I want to see it bounce above this level, at least go a bit above this level, hold this as support, and then our level of interest will be the 24.5k regions. Okay, that's the first target, and then obviously the next target will be our final target around 25,700 level. So what we want to see first is at least hold this support. I do not think we are coming back down, but okay, but if we ever come back down, here is a region for longs. Alright, here is a region for longs as well. And of course, if you want to go for a breakout play would be definitely above the previous high around 24.6k, all the way up to 25.7k. Now we need to prepare for the bearish scenario. Okay, for now I am still not bearish yet until we get one of these things. Firstly, we achieve our targets of 25,700, and then I'll look for shorts on the higher time frame. Alright, this is my first short entry. The next one would be a break below this level, 22,756. That would tell me that it's a confirm that it's going back to the bearish trend again. It broke this bullish trend for a long time already, and then I would take that short below this level. Okay, and then my targets will firstly be around 21,500. We'll see if it holds there. Okay, if it starts to bounce around here, I would cancel my short, and then I might go for a long again, maybe for a retest and go back down. Alright, but if it goes straight back down all the way to 21k regions, I'll just hold my shorts. And then again, I've always said this, my bearish target around 16k levels. And if you really want the confirms for shorts, I've been drawing this, but always just wait for the break below 21k, come back retest, then that's your short this level. So let's just talk a little bit about CPI data. What do I think will happen tomorrow at 8:30 AM Eastern? So I think the CPI data would be bullish short term. Why? Because the CPI data release will be for the month of June, not July. Just take note. And we see month of July, commodity prices have dropped and oil prices drop. Yeah, so most of these prices have dropped significantly from the highs, and therefore this definitely affects the inflation level. And if it drops, it's better for inflation. It means that inflation is peaking, so that's a sign. And therefore I think CPI data will be as forecasted, so it won't be as bad. And therefore if the market expects it, the market will rally. And that coincides with my targets for the 25k 700 levels. If CPI is lower than expected, it will be even more bullish. But what I think is it will be as forecasted, and therefore markets will still rally all the way up to 25,700, and then bam, I think the shorts will come in again. Yeah, so that's about it. Hope you guys take something away from this video. And anyway, if the CPI turns out bad, you know where I'm going to short at. And if you are super high risk, if it breaks this mini trend line, you can take this short below 23,860 as well. Okay? If you are a huge risk taker, this is the level. More confirms will be below 22,700. Alright, take care. Hope this video finds you well. And remember, the markets are always here, but your capital may not. Peace.